What's going on, everyone? And what a start to 2025. 65% of stocks in the S&P 500 closed down in the red today, led by some stocks like Tesla and Apple, which really made a statement. In today's video, we're going to talk about the most important things going on in the market right now, which stocks are moving the most, and what situations to keep your eye on for the last trading day of the week. There's a lot going on right now, and I think it says a lot how some of these powerhouse big tech stocks like Apple and Tesla are starting to move in a momentum-filled way, and all of this is happening as SPY is approaching some major levels of support in the short term. So I think we're set for an exciting end to the week and start to 2025.
Yeah, like what's going on here? It's the very first trading day of 2025 and the SPY falls down under support. Like what is going on here? But Mike, I know this morning something that really kicked off the selling pressure right away was Tesla. And I've been talking about this key $400 support on Tesla for a long time now, but they are finally down below there as of this morning and actually held down pretty low. And it looks like their delivery numbers came out and they are not very good. And Mike, whenever you have a headline that reads first drop in annual deliveries ever by Tesla, that's a pretty nasty headline to see.
Oh boy, yes, let's talk more about this. So basically, as we know, Tesla's been growing a lot over years, especially recent years, but what we saw today is they reported their delivery data, and this is actually the first time we saw their deliveries come in lower than the previous reading. In 2023, Tesla had 1.81 million deliveries, and for 2024, they only had 1.789 million deliveries, which, is still a lot, but it's certainly a trend in the wrong direction. Investors did not like this at all as the stock fell by 6%. And what's really like the key thing to keep in mind from here is that if we continue to see deliveries fall at a more rapid pace, that will bring upon some very serious warning signs. And on the other hand, if Tesla's deliveries can kind of stabilize a bit, then that can just kind of calm down some of the aggressive growth estimates for the stock and company going forward. Either way, this is not good news.
Yeah, definitely not. And I think going forward with Tesla, there's a lot of interesting things that they're trying to do to maybe turn this around. They're trying to come out with that lower price vehicle, which will be interesting. And then, of course, we have the robo-taxis and everything like that in the works. So there's definitely a lot going on here. But then there's even news with the Cybertruck EV tax credit, which actually just hit. This is pretty insane, but you can now do the $7,500 EV tax credit on the dual motor Cybertruck. Okay, this is not eligible on the tri-motor because it's too expensive, but they did actually get this other version of the Cybertruck to come in at $79,990. So hey, that's pretty good, right? The dual motor, at least it got cheap enough.
Yeah, so that is some good news. And there were a handful of other vehicles from other manufacturers that also qualified for this tax credit today, which is good to see. But right now, as we look at Tesla stock, I feel like the bad is kind of outweighing the good, especially when we look at the price action from today. So Tom, what would you say are some of the key points to, keep in mind with Tesla stock in the short term? Because, this short-term price action isn't all that great, to put it politely.
Yeah, and when this fell under 400, it fell under 400 with some real velocity, almost getting down to $370 today. That is a pretty insane drop there by Tesla, and everyone's like, well, hey, where is this stock going to start to stabilize? On the daily chart, there are going to be a lot of levels coming up that Tesla has been touching in the past. More largely, $300 was a huge peak back in July of 2023, so I will definitely be watching $300 if it starts to fall down more towards there, but more of in the short term here for the next few trading days. I really like this peak from back in November of 2024, right around the $360 mark, so I will be watching for $360 coming up in the short term, and if we go to more of an hourly chart, there are some more supports as well, right around $368 to $370, which I think will be crucial. Tesla, pretty much every $10 has a whole dollar level that a lot of people like to play. So keep your eyes on 370 and 360 going forward.
Yeah, and I was looking at 400 and 410 as key resistance levels as well. Right now, there's definitely more bearishness than bullishness with this one, but it does move in a volatile way, so keep it close on watch. Stocks like Tesla offer some pretty good moves, not only in terms of short-term trading, but also in terms of like a multi-day trend style trade as well. So definitely keep this one on watch. But there was also some news related to Apple, as this was one of the other big stocks that was leading the market lower today, and how they are discounting in China. So that was just like another like somewhat bearish thing to see. And one key thing to keep in mind, whether we're looking at Apple, Tesla, or just the market as a whole, is that a lot of stocks and just everything in general is trading at a very aggressive valuation right now. So it's possible to see like even neutral or even good news in certain situations and falling prices that come along with it. So to navigate an environment like that, you really have to be willing to flip to either side, whether it be bearish or bullish, and any time frame. So keep that in mind, but it's certainly not good to see Apple falling over like this either.
Yeah, definitely not, because they have a huge impact on the S&P, as we know. And, there might be some other parts of the S&P that might, like, make up for it. Like, let's say, like, NVIDIA right next to it, which was actually positive today, up 2.99%, which was kind of surprising. But then we go look at Tesla down 6%. We're like, oh, no, there was a lot of selling pressure today, with 65% of the S&P 500 being red. That's definitely not a good sign. So, yeah, Apple falling will be pretty rough. And I would say, Mike, by the way, Apple's starting to move here, this could be like just the beginning of a larger move. If we look at some of these other drops that Apple's had in the past, it'll have this good gap down day like this and then continue down for a couple more weeks. And that's kind of my big fear here, is that this turnover is going to result in even more selling pressure that lasts even longer.
And that is a very real and rational risk as well, because, one, the stock is up so much, but also, two, when you look at its past price action patterns, this is something that is common to see on Apple throughout many years worth of history. So I definitely like that observation, and I agree. So either way, we will keep it close on watch. But, it's safe to say that the past couple of weeks have definitely been a lot more bearish than most people are used to, not only in like a short-term standpoint, but also in a historical standpoint. When we look at this data here, we could see that the time period from Christmas to the basically start of the new year for this year was actually the worst period since at least 1952. When you look throughout history, there have been very few drops as strong as this most recent sell-off.
Yeah, that's pretty crazy. And there's been a lot of great years where there was a lot of good buying pressure as well. So, to see this one be this negative was pretty insane. But I will say 2024 was just such a positive year in general that maybe there was just a little sell-offs at the end. We might have been seeing the tax harvesting going on, that people are talking about. So definitely keep that in mind. But hey, the end of the year was definitely a big surprise. So just don't, even if like you're having a bad time right now, or the past couple weeks have been rough for you, just realize that they've been rough for a lot of traders out there, and this was definitely a surprise. This was a time of the year that is historically actually pretty bullish.
No doubt, and it's inevitable for there to be periods of selling, but what ultimately matters is how you position yourself. If you have, a bunch of extremely risky positions and you don't have stop losses and you have far out of the money options and you don't protect yourself, then, you kind of deserve what's coming. So you have to protect yourself, have stop losses, and if you are in a position and you don't like it, then that's okay. Just make sure to adjust yourself so that you can adapt in a smart, good way and start off 2025 on a, in a good way. So keep that in mind, and understand that one of the best traits you can have as a trader is your willingness to adapt. So good stuff there. But some other cool data is that, as we can see right here, the first quarter of the first year of the presidential cycle is unusually weak for the market. We can see that in the yellow highlight all the way to the left, and how it is certainly one of the weakest quarters of, let's say, this 4-year upcoming stretch. So take this how you want, but history generally is a decent guide.
Yeah, that's pretty rough right there to see that this is a pretty weak time of the year, but I will say I'm very excited about Q2, which looks great, like 3% there, and especially Q4 of year 2 and year 3 there, Q1. So there are some interesting data points here. I'm sure that as we get closer, we'll start to see some more info about these pop back up in future years. But this is interesting though, and just be ready for maybe some more flatness, right? And the market is kind of flat and weak right now, so maybe expect it to just stay this way right now. There's a lot of big levels overhead. The SPY has been rejecting at $600 in the short term, which is huge, and a lot of these stocks are starting to turn over a little bit, so just keep having that open mindset right now. That is not the historical data that we want to see.
Yeah, so looking at SPY right now, Tom, what are more specifically these key levels to keep on the radar? I know we're close to some major support, but what more specifically should we be looking out for?
Today was actually amazing. 584 gave out. We saw a great move to the downside. In last night's video, I was talking about 584 and the 585 support range holding up and ended up giving out today in a pretty good way, but it popped right back above 585 at the end of the day. I think most importantly, for the next few days, we need to keep this 578 to 580 support on watch. Today, the SPY bounced pretty close to 580, so I will be watching that as well, but that recent low at 578 is definitely on the radar for a possible bounce. Now, if we break under there, there'll be a lot of selling pressure in the short term, and as resistances, there have been some major levels that SPY has failed to break out above, which is 592 and 590. These two levels have been very crucial, and if the SPY is able to re-break this back up, then I might even turn bullish in the short term, but for right now, with the way that it broke below that channel today, that's not the best sign.
Not at all. And the more pressure SPY puts on its lows, the more fear that will spread across the market and the more, bearish momentum that it will actively, bring about. So, in the short term, there definitely is some real risk to the market. And this is not something that should be feared. Of course, while the market has been extremely bullish over recent years, it's inevitable for there to be periods of, downtrend. Adapt with it. Don't be afraid to take bearish positions with tight stop losses. I will say, in the short term, this $580 area will be crucial to keep on the radar. If we see a clean break below that in a momentum-driven way, that will be a big warning sign in my opinion, and especially if we continue to see big tech stocks like Apple, Tesla, Microsoft, Nvidia, Meta, and all these others, if they continue to sell off the way they are, that can really hammer the market lower, and Apple and Tesla certainly aren't off to the best start so far, but again, we're still only one day into 2025. I don't like to get attached to any one bias, whether it be bullish or bearish, but again, in the short term, there is some real risk if SPY does break below support.
Yeah, definitely. And those tech stocks will be on watch. So for tomorrow, if we start seeing Tesla break down below this key double bottom today, right around 373, and then of course breaking 370, that's not going to be a good sign. And with Apple, there's even some big supports in the short term with them right around $240 even, which they didn't quite get to today, but that has been a support that I'm watching at 240 as well. So there's some more supports that you guys can watch for with those two stocks. And if those big players break down, that might kind of be your go signals, so to say, on SPY.
No doubt. And then looking at some inverse ETFs for some potential upside moves in the event of a broader sell-off. You have UVXY, which is more tied to volatility. So when the VIX shoots up, UVXY definitely does some pretty awesome things. But at the same time, you also have ETFs like SQQQ, which is an inverse of the NASDAQ or QQQ. And then you have SPXS, which is an inverse leverage ETF of the S&P 500. So basically, SPXS, SQQQ, and UVXY all have the ability to move to the upside in a strong way in the event we see more selling pressure and fear in the market. So definitely keep them on the radar. But besides that, Tom, we do have one major event for tomorrow, which is the ISM manufacturing data that comes out 30 minutes after open. So keep this on the radar. But that's about it for the earnings and calendar side of things, because earnings is definitely a ghost town. So let's get right into the good stuff then, which are some setups and predictions for tomorrow. A stock that is definitely on my radar is Netflix, and it is to the downside. Netflix has been crushing it all throughout 2024, and it has definitely been weakening quite a bit over the past month or so. We're kind of like in this transition phase where we're slowly seeing more and more profit taking with this one, and I would not be surprised at all if we saw more of like a rollover and some further profit taking and just selling pressure in general. It does have some pretty key support right around this like 875 to like $860 area, so that is a little bit of a risk in the short term for like a bearish leaning play, but I think that this one has enough like relative bearishness to get it through this level and sell down more. Either way, Netflix is on my bearish radar. While I wouldn't be surprised if this did, let's say, fall tomorrow or early next week, this play can definitely, play out throughout like a couple weeks.
Yeah, definitely. It might take a little while, but I think being patient and waiting for some of these areas to break is definitely key here. I will definitely keep Netflix on the radar, Mike. With my first play, I'm looking at Micron in both directions. So I've been watching this support on MU a ton over the past couple of days and couple weeks. For right now, it seems to be holding as of today. So I will be watching this. And on a day where the market was this red, I thought it was surprising that we had MU and NVIDIA up as much as they were, up around like 3% or more. So I will be watching a couple of these chip stocks up in the short term, like MU off support. I have been watching for a support breakdown. And hey, if the market shifts and we start to see MU have a true break of like the $83.50 area, then I'll end up switching and adapting to the downside. But I do think that respecting the support and also, watching it in the short term is a good way to go, because it's bounced so many times off of this. And of course, it's even moving in a time where the market is a bit weak. And this is a good sign because it actually has weak correlation to the SPY as well. So, anyways, MU has a mind of its own. Keep watching it off support, but if support breaks, be ready to shift.
There we go. All right, another stock that is close on watch is Tilray, and it is to the upside. This is one of those crazy marijuana stocks that actually popped up by just under 10% today. I know we mentioned this one a little bit over the past couple of weeks, and basically this one has been moving to the upside in a strong way ever since like the, halfway through December or so. It has chilled out a little bit over like the past few weeks, but it has, good momentum still, and it's not really that correlated to the market in general. As we can see in the bottom right corner, it actually has a negative correlation of around a minus 0.69, which is good in a time where the market itself is a little bit shaky. Either way, Tilray has that like crazy parabolic potential, and as we head into an event-filled 2025 in multiple different senses, especially given the upcoming shift of power in the White House, it's not unreasonable to expect there to be some like increased hype in this side of things. We'll see. It's definitely more speculative compared to like other stocks and industries, but that comes along with the increased reward that is tied to a stock like Tilray. Either way, the stock has momentum right now. We're getting close to a breakout above that like $1.50 area, and it's definitely on my bullish radar, not only for tomorrow, but even like these next couple weeks.
Yeah, that would be huge to see that $1.50 resistance have a true break, and I really like the support that's held up in the short term with Tilray as well. This support is right around $1.28 to $1.30, and you can see that Tilray has bounced off of this multiple times. And if we actually go to like a daily chart, the funny thing is that the way that it's holding support is almost setting up like an inverse head and shoulders play. Either way, I just like the support there rather than the pattern, but I like this $1.30 support. I'll keep watching it to the upside with you, Mike. With my next setup, I'm looking at Tesla, and we're looking at the Bookmap once again because today was pretty crazy with Tesla, how it broke through $400. That is definitely going to be a major resistance coming up, but I wanted to show you the $370 mark right under the low from today. There was around 181,000 shares stacked up, and you can see how big of a buy wall this really is. So if 370 breaks, I'll be watching Tesla to the downside again. I will be watching 365 as this was also a more minor buy wall here today, but either way, I'm really mainly watching for that 370 breakdown potential.
All right, sounds good. So I'll definitely keep that on watch as well. As we know, Tesla is one of those stocks that definitely moves in a strong way. And, as you pointed out, there are some pretty important levels to keep on watch with this one, given this recent sell-off. So I'll definitely keep that on the radar. And besides that, it is now about that time for today's momentum plays. And with the first one, we have RGTI to the upside. And Tom, what is going on with this one? It's in rocket mode right now.
Yeah, 31% made a new recent high, which is amazing, and it's right around the $20 resistance. I think this is going to be a big psychological level, so make it break $20.20 to the upside. The quantum run continues.
Big time. All right, with the next one, we have SoFi to the downside.
SOFI, yeah, if SoFi ends up breaking down under 1375, then keep watching it to the downside.
All right, and then with the last one, we have UEC to the upside.
Yeah, the uranium stocks crushed it today as well. If UEC can break the high of day right around $7.65, then keep watching it up with RGTI.
All right, sounds good. So we have UEC and RGTI on watch for potential momentum plays to the upside, and then we have SoFi on watch for a potential play to the downside. Either way, these three stocks are on watch for potential setups tomorrow. If and only if they break through the levels listed, the stronger and more consistent these stocks move, the better they become. Basically, with volatile stocks like these ones, you have to prioritize risk management over anything else, which is true for all stocks, but, even more importantly, true when the stocks move a lot like these ones. But either way, keep these stocks on watch for potential plays tomorrow. Again, we are looking for strong momentum-driven movement here. But we also have a pretty interesting $705,000 big money play today with ticker symbol SLNO, and this is a biotech stock. So as we know, there's naturally some higher risk and higher reward in this scenario. And basically the big money bought the 50 strike call options that expire on April 17th of 2025. This is a $705,000 trade. Basically looking at this stock right now, it has been dipping quite a bit in the short term, which is good. The big money's buying the dip on this one, as it has been basing right off that $44 support level. At the same time, stocks like this one are naturally more volatile given the nature of the industry that they're in. This stock has been making higher highs and higher lows continuously all throughout 2024, which is a good sign. Basically looking at this stock, I like how the big money's buying this short-term support. I am not the biggest fan of the strike price, as $50 is a little bit far out of the money. It's nothing too crazy, but it definitely there will have to be a good move in order for this option to do well. But there is also a fair amount of time to it as well, which does help. But either way, I think this one will be pretty interesting, especially given the nature of the industry that it's in.
Yeah, this stock has actually been back and forth between like the $44.50 mark quite a few times ever since it got stuck within this zone. I wonder if this will be a nice, let's say, bottom of the range type of play where the big money's looking for a test of the top of the range, which would be perfect, right at $50. But either way, SLNO, I like the setup off support. If the support starts to give out around 44 or 43, like we talked about, then I think that it'll worry me a little bit more in the short term. But as long as the support keeps holding, I think this is a pretty viable one here, and the risk reward is pretty dang good.
Yeah, so either way, keep it close on watch. I will say if we did see a break below that $43.40 area, that would be a decent warning sign. But before we continue on, I want to give a giant shout out to today's member of the day, Misty, in the StockedUp Discord. They had a great start to 2025 with some QQQ put options. So huge shout out to you, Misty, and keep up the great work going forward. Let's see many more screenshots like this one from you all 2025 long. If you guys are new to the StockedUp YouTube channel, welcome, and consider obliterating that subscribe button. If you do that, you'll get our videos recommended to you more often. All the time, we cover the most important news, information, chart setups, big money plays, data you'd never otherwise see, and it takes us a couple hours to make these videos every single day, and we get them down to normally like 20 to 25 minutes or less. So you could have a nice, easy, sometimes funny watch for everything you have to know about the stock market each day. But besides that, Tom, I think we're set for a pretty exciting end to the week. And the market's definitely it has to show up over the short term because there's some key support levels about to be tested.
Yeah, there definitely is. Tesla's going to be my favorite watcher for tomorrow. Of course, Apple's going to be on watch as well, but I think everyone's going to have their eyes on Tesla, especially following those delivery numbers today. Just again, do not forget 30 minutes after the market opens, there's that ISM manufacturing PMI coming out as well.
Sounds great. Well, thank you all so much for watching. If you are new here, don't forget to obliterate that subscribe button. And besides that, let's have a great end to the week.